What's going on, guys? It's your favorite mortgage lender, Abdel Kwame, got mortgages, and man, we have so much data to drop on us. We are finally get some ideas in regards to the labor market. Remember, the federal government was closed for month and a half, right? And we were obviously kind of operating blindly. We're going to see here on the ADP report, right? And yes, these are negative numbers, right? June negative numbers, August negative, September negative, November negative. I think this number was full of crap, but talk about a huge loss, right, on the private sector side, right? Almost 4.4% of job stayers, 6.3% of job changers, but a huge loss, 120,000 job losses in the small sector market, which of course is a big portion of the employers out there, right? Medium size added 51,000, large 39,000, which I don't think is necessarily true. But again, private sector lost 17,000 jobs over the last 4 months. Again, a little choppy, right? Remember, the Fed has always told us we are most cautious about what? Inflation and employment. And this employment data has played such a huge role in regards to the market. And we know the following week, as the Fed meets, could this potentially be the signs that the Fed needs in order to formally agree that they are looking to cut, right? We know that obviously we're looking at the target inflation. Remember, like I said, we're operating blindly, but Fed Chair Jerome Powell previously said this is a no risk path when they cut back in October, right? So again, as the Fed adjusts interest rates, it changes. We've said this time and time again, federal funds rate. PCE, personal consumption expenditure report, you can see we've been pretty flat at that 2.8 mark on the core and on the headline. Just a small tick up on core of 0.2%. If we look at the last 3 months, we're at that rate of return of 2.6%. Initial jobless claims dropped by 27,000 to 191,000. Again, that decline most importantly influenced, of course, we know that it was Thanksgiving. We also know that there was a report of 71,000 job cuts in November, 24% increase from a year ago. That's a big deal when we look at the challenger job reports. Now, if we take a look at here, also hiring plans also weakened as well. That is something that is important for us to take a look at because we obviously know the less hires, of course, contribute to the less job openings, which contributes again into just higher perceived costs, right? Again, with the PCE report data, is this the signs that we need? Because we do know, again, bottom line, inflation's in line with those forecast estimates as the Fed looks to potentially cut. We know that the PCE report has always been the Fed's favorite measure on inflation. It rose 0.2% in September and edged just slightly year over year, 2.9 from 2.8%. Next week, what is happening? We know the Fed is meeting on Tuesday. We'll have the results of their meeting on Wednesday. We know that we will get job opening and labor turnovers. We'll kind of see how that comes in, along with a little bit of updates on the initial jobless weekly claims. Okay. So a lot going on. Of course, we will keep you guys updated as the market continues to transition and take it from there. Have a blessed day, guys. Talk to you guys soon.